Healthcare in the United States is extremely expensive, and the cost of it has been rapidly rising over the years. But luckily there is one small thing, one little bright shining thing that can help out with the cost of increasing healthcare costs. And that is an account known as the Health Savings Account, aka the HSA. So in this video, I'm going to give you pretty much everything that you would realistically need to know about a health savings account. What it is, how it works, and how it can be beneficial for you to help pay for your healthcare costs and also help grow your net worth in the long run and set you up for a really great retirement. First things first, we need to talk about what is an HSA. What is a health savings account? Well, in short, it is a tax-advantaged account that is designed to help pay for your healthcare expenses. And that doesn't just mean when you're older, it means pretty much throughout your entire life. A health savings account has many benefits, but its main purpose is to help you pay for healthcare related costs. Unfortunately, not everyone can have a health savings account, which brings me to my next point on who can actually open an HSA. And in order to open up an HSA, you have to have what's known as a high deductible health insurance plan. So the deductible that you pay, your annual deductible before the health insurance kicks in has to be above a certain amount in order to be eligible to open up a health savings account. So if you have like a zero deductible plan or you only pay $1,000 a year, no matter what, for your health insurance plan, then you're probably not going to be eligible for this. But if you do meet the basic requirement over a certain amount of deductible that's required in order to open up this account, then you can definitely open it up in many circumstances. While at the same time, even if you are receiving like a subsidy for health insurance, as long as your health insurance still has that deductible, even if part of your actual premium is being paid for as a subsidy, you can still open up an HSA, as long as it meets those basic requirements in order to be eligible. And typically, even if you are looking at like subsidized healthcare, or when you open up an account, they're usually going to be very highly advertising if it's HSA friendly. If you can actually have a HSA while having this health plan, it's usually a big deal, and it's usually highly advertised for whatever health insurance plan that you're looking for. And that brings me to my next point, which is what is actually the minimum deductible requirement for you to even actually get an HSA. And this is what the amounts are right now in 2020. If you are single, then you need to have at least a minimum deductible of $1,400. And if the health insurance plan covers your entire family, like you and a spouse and maybe your children, then the deductible needs to be at least $2,800, which is double the single rate. So as long as your health insurance plan has that minimum deductible, that is one of the biggest keys for it to be eligible for you to open up your own health savings account. In addition to that, there's actually a maximum annual out-of-pocket requirement for your health insurance plan to have. And so if you are single, that maximum annual out-of-pocket requirement is $6,900. And if you are a family, like your health insurance plan covers a family, and then it needs to be a maximum of $13,800. Now there are probably some small other things that is required for you to be eligible for an HSA, but these are pretty much the main things that you are looking for: the deductible and the maximum out-of-pocket for you to be eligible to open up that HSA. And as I said before, usually when a health insurance plan is advertising, if their plan is HSA eligible, they are going to be making sure that they're advertising that, because a lot of people, they are looking for those accounts that are HSA eligible. And we still have so much to cover on the HSA. But before I move on real quick, I just want to say, if you're enjoying this video so far, please make sure you like it, give it a thumbs up. It helps me out so much, and I really do appreciate it. While at the same time, consider subscribing to the channel, because every single week I'm putting out new information on personal finance, including growing your net worth, including investing, and currently I'm doing Tuesdays and Fridays at 8 a.m. Pacific Standard Time. There's new videos, so make sure that you like and subscribe to the channel so you don't miss out on anything. But now I want to move on to who would want to open an HSA. What's the benefits of an HSA, right? We already know the requirements on what you need to do in order to be eligible to even open one, but why would you want to open one in the first place? Well, there's so many benefits to an HSA, and probably the biggest one is that if you have a high deductible health insurance plan in the beginning, then you're going to typically have lower monthly premiums. So by taking on that higher deductible, where you're going to say, I'm going to pay a little bit more out of my own pocket if I do have health related costs, you're typically going to be awarded with lower monthly premiums on your regular health insurance bill. While at the same time, if you actually have an HSA account open, then you can get some really nice tax benefits. So the way the tax benefits work with the HSA is that you are able to contribute money to the HSA, and then you are going to get a tax break on that. So it is actually going to adjust your income down. So the amount that you contribute to an HSA is not taxable. And then while it's in the HSA, the actual account, it grows tax-free. So you can actually invest while it's in that particular account. You can invest in pretty much anything depending on where you open up that account at. And so that it has a great investment benefit. Also, when you go to withdraw that money, you can actually pay $0 in taxes on that as well, as long as when you withdraw that money, it is for eligible out-of-pocket health-related expenses. So if you had $1,000 in healthcare out-of-pocket expenses this year, you can go into your HSA, withdraw $1,000, and then that $1,000 will not be taxable. It saves you money going in, and it can save you money going out on taxes. So it's an amazing tax-saving vehicle. While at the same time, even if you don't end up using a bunch of money in your HSA, you can also use that HSA almost like a regular traditional retirement account, and I'll get more into that in just a minute. But first, as it relates to the tax benefits, you probably want to know how much you can contribute to an HSA and how much of a tax benefit that you can get. So if the HSA is for just a single person, you can contribute up to $3,550 per year to that HSA account. And so that means that you can get possibly a $3,550 adjustment of your income to get it lower, basically reduce your taxable income. And if that HSA covers a family, then that amount is double, which is $7,100. And also, like most accounts, you actually have a provision where if you're over the age of 55, you can contribute an extra $1,000 to that HSA. And of course, if you and your spouse are over 55, then you can get an extra $2,000 that you can contribute to that HSA. And also, the tax benefits don't stop there, because most things, when you're going to get a tax benefit from it, like a tax deduction, they usually have phase outs. But in the case of the HSA, there is no income limit, there is no phase out. So it doesn't matter what your income level is, you can contribute to an HSA as long as you meet the requirements, and you can take that as an adjustment to your income. You know, it doesn't matter if you make $100,000, $1 million a year, it doesn't matter. You can contribute to an HSA as long as you have that high deductible health insurance plan, and you can get that tax deduction. And not to mention that while the money is in that account, you don't pay any taxes like if you make any gains. You know, if you buy like a stock, you buy some bonds, whatever it may be, and they pay interest, they pay dividends, or you sell them off and you realize a capital gain, you do not pay any income taxes on that amount, because it is, you know, in that account and it is shielded from taxes. And then, like I said before, when you go to withdraw that money for a qualified health expense, you don't pay any taxes on it as well, because that is what the account is designed to do. But beyond that, you know, even if you accumulate a bunch of money in this account, you know, you over the time you contributed regularly and you invested in the account, and let's say you're nearing like traditional retirement age and you have, you know, a pretty good hefty sum of money in there, and you're luckily you didn't have to use it for, you know, a high cost of medical expenses out of pocket. Well, then there's some good news to that as well, because once you reach over the age of 65, you can treat the HSA pretty much as a traditional retirement account, whereas you can withdraw money for it even if it's not for health-related expenses, and you will only have to pay regular income tax on that amount. But at any time, at any age, if you use it for qualified medical expenses, then you will not pay any income tax on it at all. But if you do withdraw money from it before you're 65 and it's not for qualified health expenses, then you will be subject to a tax. So currently that tax is 20% of an additional tax on top of it being treated as regular income. So you definitely want to stay away from withdrawing from an HSA if it's not for health-related expenses, or if you're not over the age of 65, so where you don't have to, you know, face that really harsh penalty tax. And honestly, that is pretty much what most people need to know about the health savings account, you know, the major benefits of it. And it is really one of the greatest kept secrets to growing your net worth because of those amazing tax benefits. But there is so much more to learn about optimizing your taxes and growing your net worth and investing correctly. And that's why I want you to watch this video right here called How to Achieve Financial Independence in 10 Years or Less. It is a blueprint to become a master of your own cash flow and grow your net worth. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.